All right, recording is rolling. I appreciate everybody who has joined here on a Sunday night trying to get some education in. Other people out there, right, partying on the weekends. What are you guys doing? Sitting here, right, trying to learn, trying to study. That already tells you that you're at the top, right? Top 10% of people who actually want to gain that profitability, gain that ability to change their lives, right? And being here, studying is going to bring you that, right? Something that I had seen, I think this was MetaFX. He posted this a while back, but he ended up reposting it about the studies, right, that go into trading. So many people, right, will spend years, 8 to 10 years, right, building their degree, building their colleges, going through education to be able to come out and make a six-figure payout, right, within their job that they are going to make. The issue with trading is the ability to make multi-millions, right, very quickly starts to trickle into our brains, and we start to believe it as more of a gambling or type of psychological, right, understatement, to where we don't actually understand what's going on, and then we think it's one way but we end up getting smacked and all of a sudden it's the other way, right? And then all of a sudden you're sitting there like, am I wrong? What is this? What is that? And you get into that loser cycle. That's something that we want to stay away from. So understanding that the market has probabilities, and understanding that you need to sit there, right, and put in that work, put in those hours, see this for yourself on the charts. Yes, we go over yes, we go over these entries, and yes, we go over everything up until that point, right? But until you yourself go to the charts and back test that and see that pattern recognition, right, for yourself, then you will be able to gain that confidence within yourself, your trading style, and how you will be able to hold and or not hold for trades. So today, right, I'm just going to go over it again. We're talking about a higher time frame narrative with lower time frame entries, a literal, actually this is monthly to 1 minute breakdown that we are getting into this trade right here. Again, I did miss this trade, wasn't able to call it out. I wasn't at the office at the point in time that this ended up hitting, but it's completely fine. Narrative hit perfectly, right? We talked about the Wednesday to Thursday reversal. Thursday reversal happened perfectly, structure lined up with it, and then you got the delivery into the lows. One thing I do want to mention about this is this monthly chart, right? Many traders, I don't have the sentiment up right now, but looking at the sentiment from the past, right, they have been 80 to 70% long on this asset right here. Because what are they doing, right? They take a monthly chart, they take a 6 month chart, and they say, look at this, right? We're creating lows, we're breaking structure to the upside, we liquidated lows, we're coming to these areas. We need to still understand our structural narrative and where that liquidity is going to follow from that. So I'm going to go ahead and delete these alerts right here for you guys. Apologies. Once I do get that done, we will get into the technicals of what is happening here. But understanding, right, that retail has been 80% or 70% long on this asset, right? Ever since we got these lows, ever since we got this possible break of structure to the upside, right? But we need to understand, where did that break of structure to the downside occur? Right? Where did that happen? Where did that supply zone form? Right? Where did price deliver up into those areas from the initial breakdown to the downside, right? So instead of always just looking to catch the bottom within these scenarios, I'm looking to play the continuation. I'm looking to play what the actual narrative is showing me, right? So let's go ahead and bring these back, and let's understand what is happening here, right? So we saw the breaker structure to the downside, clean displacement candle on the monthly, right here. Candle before that, right, lies right here. Here's your supply zone on the monthly chart. You could even bring it to a 6 month chart. You can see that we just rated liquidity to the upside, right? Going to higher time frames are also going to give you confidence in holding for longer as far as your narrative goes, right? So understanding that we came up into this area, liquidity rated to the upside right here, right? Mitigated this area of supply, broke to the downside. We are still bearish, right? Showing that bearish narrative. Here's your fair value gap as well as your lower time frame supply zone, right? Within this candle right here, we come up into those areas, mitigate those areas, and then we start to continue to move downside, because the overall bearish narrative, right, is still going to hold true for the sell side liquidity below. Yes, the market targets liquidity over and over, but your higher time frame narrative is going to tell you the delivery to that liquidity, right? So this is very important when we are looking to get into trades. So let's do now our breakdown, right? So a 6 month chart, we can see that we broke down to the downside right here, right? Pretty obvious. Let's go back over here. Now we showed the monthly chart, broke structure to the downside. We have a displacement candle that lies just before that, right? Then what do we do after we mitigated that? We're looking for confirmation of our zone, right? We need our lower time frame structure, our internal structure within, right, to switch bearish as well for this narrative. narrative. So understanding that we came up into these areas, rated the highs, now that all the early shorts are out of their trades, right? Now that everyone is in longs at this point in time saying upside, 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 right? It's going to break structure to the upside. What do we see? Delivery up into that area. The reason is being formed right here, right? They're trying to take longs to the upside. All they end up doing, right, is providing liquidity for our narrative, for our structural narrative. So we come up into these areas, break structure to the downside right here. We can see that on a monthly chart as well. Can even go to the daily at this point in time, right, after we came up into these highs. We can see, right, what happened, the manipulation of the highs into these areas, right? We came up, created a new high, came down, created a lower high, broke structure to the downside right here, and now we have our area of supply, right? So in a lot of these cases, instead of trying to snipe the top, we can just wait for that confirmation. If, right, we saw a move up like this and then we saw this going on, we're still looking for delivery up into these highs. Why? Because this low caused this high. I haven't had to break a structure with significance yet, right? So it may look very choppy, but as long as you're still following that market structure, still following that overall plan, then you're going to be able to deliver, right, with that confidence that we are looking to see, right? So we came up into those areas, and apologies, from a monthly to a weekly now is what we're going to be looking at within these areas right here. I showed you the daily as well, but look where I showed you the daily. Right? Can't we see now how in multiple time frames we are getting the same confluence within one area? This is going to give you confidence as well as looking for areas to enter off of, right? So we came up into this area right here. We can see we broke structure to the downside on the weekly. Your supply candle lies right here, right? We can see we came down to these areas, confirming more breaks of structures to the downside. We have our supply candle that is formed. We can see we mitigated it once, created a new low, and then came up back up into these. Oh wait, sorry, this one right here. Apologies. Came back up into these areas, right? And following that liquidity rate to the upside, now taking out all the early shorts that tried to get in on this move to the downside, right? As well as late longs getting into trades, providing more liquidity to the downside for our structural narrative to the downside. We can start to see how that price delivers now. So on a weekly, we can see where we broke structure to the downside. Let's wait for the daily after mitigation, right, of our zone. We come up into our zone. Where does your daily structure break to the downside, right? From a monthly to a weekly to a daily now. Can we now see the same exact behavior within our zones, right? This is starting to come to play now. We can see we came up, rated highs, broke structure to the downside. Where's your candle before the candle that broke structure to the downside, right? We see the structure break occurring right here. Where's your candle before? Lies right here, right? You now have a supply zone to look to take trades off of to the downside, right? So now on from your monthly to your weekly, right? Monthly supply, weekly supply, daily supply. We can now start to see how this is coming into play, right? So now from the daily, we'll go to the 4 hour after the 4 hour switches bearish, as well as these areas too. Okay, so we need to understand this here. We broke structure to the downside, right? Another break of structure to the downside. So we've now created another range from this high to this low right here where that supply was formed, right? And then we can start to see a daily shift in structure, meaning a weekly pullback could be in play, right? But as long as that daily narrative still ends up rating liquidity to the upside and breaking structure to the downside, rating liquidity to the upside would be taking out all the early shorts, right? And then breaking structure to the downside, that would be introducing now new supply within this area instead of looking for here, 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 right? Any of these zones, we're looking for the new introduction of supply. So we can see on the daily chart, right, how we came up, rated highs. We still created a lower high within these areas, created a higher low, came up, rated more highs, and then we broke structure to the downside, right? Here's your structure break once, here's your structure break twice. You have your area of supply, right, where price came up, rated liquidity, and then made our move. So this move right here, this was a little bit trickier, right, within these areas as far as entries go. But this move right here is what we're looking for. This is that algorithmic introduction with displacement to the downside that I'm looking to take entries off of, right? This is my high that caused my low, so my strong high that caused my weak low. Supply was formed because of that, right? And I'm looking for the continuous delivery to the downside. Retail's still looking for longs, 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 longs. They get destroyed, right? We can now see the reason why we are still coming to the downside. Why? Because we can see all the equal lows that are being created on these moves to the upside, right? So this is that algorithmic footprint that I'm looking for on the break of structure to the downside. We saw a weekly, we saw a daily, we saw another daily, right? We can look for the 4-hour now once we come up into these areas of supply, right? So now we'll go from the 4-hour to literally the 1 hour, 15-minute, 5-minute, and then the 1 minute. And I'll start to show you how we can literally catch a weekly trade, right, or a monthly trade on a 1 minute time frame and still be able to hold for that monthly trade, right? And you'll understand too that the ability of um, catching these trades on these lower time frames is now going to allow you to take profit much quicker. Why? Because your R&R is much higher, right? So I can now take profit much quicker on this move to the downside and be okay, right? And still let it run. That's how we can start to protect ourselves as well as hedge, right? So within these scenarios, we come up into this area. We're waiting for now the 4-hour structure to switch bearish, right? After the daily structure shows us that bearish move to the downside, after we come up into areas, take out all the early shorts again, and then break structure to the downside. Same exact behavior over and over and over again, okay? So we come up into these highs right here. We take out the highs, right? You can see we're filling fair value gaps, possibly lower time frame supply within this area. Not too important to me. I'm just looking for the manipulation and then the break of structure to the downside, then confirming my supply as new supply, right? So we see the liquidation to the upside. Where does the breakage structure to the downside occur, right? On this move to the downside right here. You could call this the high and then this the lower low, right? And then we create a lower high and continue to the downside. Let's look within this structure right here to understand what had happened, right? So on a 4-hour time frame, we can see the move to the downside. Why did I choose this candle? As it's the institutional candle. Reasoning from that, it's the candle that rated liquidity and started the break of structure to the downside, right? That's where that algorithmic introduction occurred on this move to the upside right here. So now from the 4-hour, now that you have your 4-hour break of structure to the downside, let's wait for the 1-hour to switch after coming up into areas of supply. Actually, this is something that I want to point out as well. Let's look at the 4-hour. Let's draw out a short position, right? So I'm going to go ahead and draw out a short position. Stops over this high, taking it to this low. 5.44 to 1, right? It's a 511 pip move. You're still going to make pretty much a lot of profit on this trade, right? But can you risk all that much because you have a 94 pip stop loss, right? Within these scenarios, you're making a 5 to 1. Nothing is wrong with that. You still have confirmation from higher time frames to even more higher time frames, right? Obviously, higher time frames are going to show that narrative over those lower time frames until the lower time frames are coinciding with the higher time frames, right? Until they're within harmony. So within this trade right here, you would catch a 5 to 1. I'm showing you guys this so we can talk about the understatement of time efficiency as well. I'm looking at crypto chat real quick to see if there's any questions. Oh, Maverick says can't wait to join. But anyways, right, we come up into these highs right here. We break structure to the downside. Your institutional candle following the liquidity raid is now presented, right? So now let's wait for the 1-hour to switch after the 4-hour break structure to the downside. So now I'm only focused on this, right? There's my next algorithmic introduction. Here's my first. Here's my confirmation. Now I can look for lower time frame confirmation as well, right? So now from a literal monthly to weekly to daily to 4-hour, let's go to the 1-hour. Right, we came up, right? We came up, rated the highs, took out those early sellers again. Now on the 1-hour, what were we talking? Literally the same exact thing, right? Over and over again. Wait for the early sellers to get out. Wait for the break of structure to the downside. Look to take your trade, right? So now we can see as we come up into these areas, we raid the highs. Where's the break of structure to the downside, right? Here is your break. So we have one move to the upside right here. We have a low that is created, a high that is formed, and then it is broken, right? So here we go. We have our area of supply, right? Our drop-based drop. Here's your liquidation, right? To look for price to come back into these areas. So we have this break of structure to the downside right here, right? Where's your candle before the candle that did that on the 1-hour now? We can take a look at this candle right here, right? Break of structure to the downside. Here's your candle before. Remember on my higher time frames, I'm using body closures. On my lower time frames, I like to look at wicks. High time frames 4-hour plus. Okay, so from now the hourly, let's go to the 15-minute. Where's the 15-minute structure break to the downside, right? Again, same exact thing. We can see we came up, came back down, mitigated that area of supply, right? This drop-based drop tells me that there was redistribution within this area. If we go to lower time frames, we'll be able to see that, right? But I want you guys to be able to see this from these higher time frame perspectives, how structure is actually occurring, right? So now that we got another move to the downside right here, we can see that we came up, created that drop base drop, and then dropped off again, right? So where's our next area to look to possibly take this to the downside? So we came up, broke structure to the downside, and then confirm that with this move right here, right? We can see, oh wait, let's just bring this down right here, within these areas, how that occurred. So we had that structure break to the downside right here. We came back up into that area, that drop base drop on the lower time frames, and then we saw that continuation to the downside. Now let's wait from a 15-minute. All right, actually I want to show you guys this real quick as far as this time efficiency goes, because we showed, right, the hourly or the 4-hour. So let's show the hourly now within these areas right here. So on an hourly chart, let's go back to the hourly. You can see that we broke structure to the downside right here. This candle traded back up into this supply zone. So now that I've waited from a 4-hour to an hourly, right, and I can look to enter my trade on a short position right here, stops even over over this candle right here, or I would put it over the supply zone. Personally, I would play it over the supply zone. The reasoning is from the risk that is applied on this move to the downside right here. Right, but now doing the work from an hourly or from a 4-hour to an hourly, I have been able to, right, to almost double my profits within this trade in half the time, right? So a 5-to-1 within this scenario falls in literally half the move that the 5-to-1 does within this scenario. Now we can see where that time efficiency comes into play and how that time is money effect will work out, because now I have the ability, right, to reach my goal much sooner because I waited for that confirmation, right? So now that we get that move to the upside right there, let's go on the 15-minute. All right, we get that structure break to the downside right there. Let's just bring these back to make this not so confusing for everybody. Structure break here. Structure break here. Why? Because this is the low that caused that high, right? And then we see the confirmation of that move to the downside following this move right here. Let's wait for now the 5-minute time frame, right? So now that the 15-minute has switched bearish, right, we're waiting for the 5-minute to raid early sellers and then break structure to the downside again. Where does the 5-minute raid early sellers, right? Where does it get people into longs within this structure right here? We can see, right, that price comes up into this area right here, shows that liquidity raid to the upside. We must remember this high caused this low. So this is a weak low. This is a strong high, right? We rated liquidity. All we did was mitigate that area of institutional candles, probably on lower time frames, right? And then after we did that, what are we doing now? Creating that long liquidity, creating that reason to continue to the downside from now the monthly to the weekly to the daily to the 4-hour to the 1-hour to the 15 to the 5, right? All of this confirmation up until this point in time. And now that that has been received, right, you get your break of structure to the downside with displacement that occurs right there. Where's your candle before, right? You have your area of supply on this move to the downside right here. Short position within this entry right here, stops over this high. Then again, targeting that same exact narrative. Now all of a sudden, right, my 8-to-1 from an hourly time frame, my 5-to-1 from a 4-hour time frame has turned into a 13-to-1 now on the 5-minute time frame, right? And you can see we sacrificed all of this price action right here. We sacrificed all of this price action right here, but I still was able to make more, right? Now we can see how this profitability comes into play through that confirmation, right? So now from the 5-minute, let's go to the 1-minute. Bring this back so we can take a look at this. Apologies if you guys hear the dogs in the background. They've been very annoying right now. But within this scenario, right, let's look for the 1-minute to do the same exact thing. So when does the 1-minute switch bullish, right? Right here. We see that move to the upside right here. We see a liquidation rate to the downside right here. We see a new high that is created on that move to the upside right there, right? So now that that is formed, where's your break of structure to the downside? Let's go ahead and get rid of this. Let's just hide that. Bring this to the side over here. And let's look at where this occurred, right? Where's your break of structure to the downside? I don't see any lows right here, right? Obviously, intermediary lows, they could be 15, 30-second lows, but I'm looking for the 1-minute structure, right, at this point in time. So where's my 1-minute structure? Created a demand zone, right? Created that area that can be invalidated for us to look to take trades on, right? So now that that has occurred, we saw the liquidation rate to the upside, and then the break of structure. Break of structure to the downside. Where's your candle before that candle? Again, that allowed that. Up within these areas. All right, now your stop loss is increasingly less, taking it now to the same exact areas. So now that we see, we have a 28-to-1 now available to us because we did all the work up until that point. Our 5-to-1 has turned into a 28-to-1, right? Almost 6 times what we would have made holding for much longer, right, within this scenario. We have waited for the patience up until this point, and now that it has occurred, I am able to risk much less, right, and allow myself more profitability within these scenarios. That's what you'll see, right, the higher time frame to lower time frame confirmation that we are looking for and how it will actually deliver. And now that that has occurred, right, we'll play it out. Let's go on a higher time frame just to let this go. Right, that delivery into those lows. We actually haven't even taken out the lows yet, which is perfectly fine, right? But we're coming down into those areas. We're still showing that bearish structure to the downside. We're still looking for that delivery into those lows until proven wrong, right? If structure were to break upside here, possibly show some demand, then we could look for possible moves back into supply that cause the breakdown, therefore catch another entry and look to take it down, right? So now with this being said, look at this, right? Look at our higher time frame narrative and how this was able to turn into this. Let's talk about the time inefficiency as well. If we were within entries, right here within this point in time, your 5-to-1 would have been hit, right, roughly within, I believe this hit pretty quick. Yeah, 2 days, 2 days and 14 hours. For that hold, not bad at all. You're pretty much disagreeing the entire time, right? 5-to-1, pretty good, pretty good. Nothing wrong with that trade. It's still a profitable trade, right? It's all up to how you want to risk as far as higher time frame to lower time frame entries. But understanding now that we had that 5-to-1 in a few days, where did the 28-to-1 occur, right? And where did it hit? So let's go back on our lower time frames. Let's draw this out, right? At this point in time, from this entry, right, we can see it came back down into these areas in roughly 2 days as well. So wait, hold on. Let's bring this back. Bring this back from here real quick. This entry. Yeah, 2 days, 12 hours, and 16 minutes. So 12 hours less, 6 hours less actually within this trade. To the downside, all we had to do was wait 6 hours, wait for the entry, right? And we were able to gain 5 to 6 times what we were able to gain from this entry right here. That's when you guys will see me start to say, I don't need to catch those moves, right? I don't need to catch the top. I don't need to catch this top, and I don't need to catch this bottom. I can catch the continuation, right, with the trade to allow me much more profitability because I now know that it's fully confirmed within these areas, right? I now know that it's fully confirmed, so I can enter my trade with much more margin, risking a lot, still the same amount, right? Still risking that same exact amount, but with that ability, I am now able to gain that profit much quicker, right? TP much quicker. We had talked about the 5-to-1. I'm at a 5-to-1, right? Within, let's just talk about this right here. You're 5.42-to-1 within this trade, right? We just showed the 4-hour within 42 minutes, right? We made the profitability that we were able to make on the 4-hour trade holding for 500 pips, okay? On a 1-minute time frame holding for, 45 pips, okay? So now we can see we don't need 500 pips. I can take 40 pips and still make what I can make on a 500 pip move. It's all about that confirmation up until that point in time. This is why personally I like this low win rate, high R&R ability better because it's not going to be perfect like this every time. You're going to have lower time frame zones that are violated that you don't understand why they're violated, and that's going to come with the experience and coming with understanding which zones are your actual supply and demand zones, right? After the liquidity, right? After all the early buyers or sellers are taken out of their trades, right? That's when that zone is now going to become present, and that's when you are now going to be able to have that entry. So with that being said, let's again do some emphasis on my high R&R, low win rate type of ability versus, right, that high win rate, low R&R type of trading style. Either is profitable, right? It's completely up to you. One just suggests and has the ability, or has to have the ability, for the trader to be right on the chart, right? You have to be right more often than you have to be wrong for you to be profitable, right? Within a low R&R, high win rate setup. So what this means is, and let me just get out of replay mode right here. So what this means is when we talk about this, right, I'm going to show the P&L again of both, how your P&L will look like as far as low R&R, high win rate, and high R&R, low win rate. So let's just put this down. Let's just put low RR, high win rate. Let's clone this. And we'll do high R&R and low win rate. Now, what does this mean for the high R&R side, right? Low win rate suggests that you are going to lose a lot more than you are going to win. But with the ability to now have lower time frame entries with much less risk, right, applied to that certain position, you are now able to have multiple chances versus, let's say you had a low R&R, high win rate, right? You were looking for 3-to-1s over and over again. That now gives you the ability, right, depending on how you're trading, depending on how your stop loss is presented, to lose a lot less. You have to be right on the chart more with this type of setup than you do with this type of setup. Because as you guys saw, we made the 5-to-1, right, within a lower time frame structure, within a 1-minute structure point, whereas this low R&R, high win rate would have suggested you hold for the 4-hour entire move. Right? Both are very, very profitable. Both made the same amount of profits. One was just in 40 minutes versus the other one in 2 days. Right? You can now start to see where that comes into play and why I personally like to take these high R&R, low win rate setups over these low R&R, high win rate setups. I would rather be wrong more times than right to be able to gain that profitability much quicker, right, than this low R&R, high win rate type of scenario, because now I have to be right on the charts. What if I'm wrong on the charts, right? And let's show the P&L as far as that goes. So you start off, right? Actually, let's do low R&R, high win rate first. So you start off, right, low R&R. Say you catch a nice 3-to-1, your account starts to move up, right? You lose 0.5%. That's completely fine. You start to move up again, right? Another 3-to-1 gained, lose 0.5%. That's completely fine. Start to do it again. What happens when you lose twice? Lose 0.5%, lose 0.5%, right? And now you're starting to go below your means. You're starting to become possibly unprofitable within these areas, right? What if you lose 3 times? Now you are down where you started, right? And what is this going to do for the psychology as far as the trader? Because now this is suggesting that you have to be right on the next trade, otherwise you're going to lose profits, right? Let's say you're right, okay? You got a nice little 3-to-1, another 3-to-1, right? And then you catch another loss. Back down where you were again, 2 losses, maybe even 3 losses, right? And now where are you again? And it seems like you're almost always climbing up, right? Let's just say 2 wins right here, maybe even a 3-win win streak, right? But then you get that loss again. Now where are you? Back where you started, right? And it seems like you're always trying to climb back up to those all-time highs, right? And catch those all-time highs over and over again on your portfolio. And this can be very, very stressful. And that's why I personally didn't like to take these scenarios. Now let's talk about high R&R and low win rate. What is your P&L going to look like over the course of some time? Right? So with a high R&R, low win rate, I'm risking much less than I am with a low R&R, high win rate. Right? And we see a move to the downside, we see a move to the downside, we see a move to the downside, high R&R. Move to the downside, 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 high R&R. Downside, 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 high R&R. Right? You could lose 6, 7 trades, and we now see the profitability and the understatement of how we can profit much quicker with these high R&R low win rate setups, even though we are losing more, right? So again, let's say you take 2 losses, high win rate, right? Another 10 R&R. 2, 3 losses, 4 losses, 10 R&R, right? And now it seems like every trade that you hit, it doesn't matter about all this that you lost. It doesn't matter about the week or two that you lost 10 to 20 trades in a row, right? Within these scenarios, because there are 1 and 2 trades are going to completely blow that out of the water. And that's why I like these high R&R, low win rate setups. I can sacrifice being wrong a lot more than I can within these scenarios, right? Because I understand that 1 trade, that 2 trades, that 3 trades, whatever it is going to push myself back up above all-time highs or back super profitable as far as where I was before, right? So both of these are not wrong. Both of these can be profitable, right? If you're looking for a high win rate, preferably something over 50%. You don't want something that is going to lose more than half the time, right? High R&R low win rate, I'm just looking for that setup to come into play, right? I'm not looking for a certain win rate. I don't even care about the win rate at this point in time, right? More about the R&R that is given to me, the availability that is given to me, and the profits that I'm taking as far as what what R&R I'm going to make on that certain trade, right? So with that being said, this was that emphasis on low R&R, high win rate versus high R&R and low win rate. Both are completely up to you as a trader, right? And something that I like to suggest to a lot of new smart money traders is when you're getting into this game, right, and you are trying to catch these setups, go to this, right? Don't even go to this overall. But what I mean by this is on our daily chart, if you're comfortable with the daily, if you're comfortable with the 4 hour, and if you're comfortable with the run hour, run those. If you're not comfortable with the 15 yet, don't get there until you feel like you have found that comfortability within your higher time frames, right? This is something I had to do as a smart money trader when I first got in the game, because what do a lot of smart money traders do? What is the mistake that they make when they see this high R&R low win rate setup, right? They're like, "Oh, I'm going to catch the bottom and I'm going to catch it on a yes, sir. I got you, Maverick. We'll go over gold. Beautiful, beautiful trade. I'm glad you actually asked. Um, but this ability, right, where you understand to take these certain trades because you understand that these 1 to 2 trades are going to increasingly bring your account, right, your portfolio in profits, is going to allow that comfortability. Now, with what I was saying with the higher time frames to lower time frames, yes, I do. So I'll show you how that comes into play in a second here. But understanding that how this works, right? If you are not comfortable with the 15-minute or the 5-minute or the 1 minute, don't go on it. Do not go on the 1 minute yet. Don't go on the 15-minute yet. If you are comfortable with the daily, the 4 hour, the 1 hour, keep running that until you have gotten comfortable, right? Obviously, you can risk a lot less as far as your position sizing goes, right? Um, with that being said, right, once you start to get comfortable with those lower time frames, then you can start to move to those lower time frames. So with that being said, I do want to go ahead and get into gold real quick. As Maverick asked, we'll go ahead and take a look at that, where I trimmed, why I trimmed, and why it even made sense on these. All right, so with that being said, I'm going to go ahead and go over to XAU now. XAU USD, where the trim occurred and why the trim occurred where it occurred. Okay, so on our higher time frames, just to be very, very clear, before this was created, so if we're looking left, right, we can see that this low caused the high. I have now my premium and discount range that has caused from that. Where did the liquidation rate occur, and where did the new demand introduce, or where was it introduced within a certain scenario? Liquidation rate to the downside, break of structure to the upside. Remember, this is a weekly chart. I'm using body candles. Rally base rally, area of demand, right? We can see that it is unmitigated, and we are creating liquidity just above it, right? So now I have 2 confluences as far as where I want to look to take this take profit. I personally always target structural liquidity as far as my trades, as that's how the algorithms are going to target as well. They're targeting the buy side, the sell side, and I'm looking to target the same as far as how my structural narrative goes. But understanding, right, weekly breakdown, we came up into that area of supply and then broke daily and lower time frames. That's when the entry occurred. So where was my narrative overall to begin with? Let's say I wanted to long this, right? Where would I long within this scenario, right? Down here at these areas after a liquidation rate to the downside right here. So now that I have that narrative right here, I have where I would look to long as well, and I have the structural narrative on my side. I have multiple confluences coming into play. So now let's talk about how I'm going to take profits within this certain scenario. Now, personally, I like to take it based off of R as well as LTF structure as far as where I'm going to look to break even. Meaning, once we had that daily structure break to the downside, right, we had the 4 hour up until the 1 hour and then the 1 minute. You can see the 4 hour right there. 1 hour, I got a risky entry on that trade right here. The more confirmed would be on this move to the upside right here. But on your higher time frames, when you're looking to take your trades, one, you can start to take it based off of R as far as your structural narrative goes. Obviously, this is 183 to 1. So literally anything within these areas is perfect. But at these points in times, right, I'm going to take my first trim on my most recent structural narrative that has been given to me. Meaning that on this certain move to the downside right here, we can see that this low caused this high. Right? So I get a break of structure to the downside on the 4 hour. Where's my weak low? My first take profit. Let's delete those right here. That's that first take profit that I can look to take profits at, right? 10 to 1. That's completely fine. You could take 25% on a 10 to 1 and then look to hold for the higher time frame narrative. And now that I've received that break of structure to the downside, right, where's my next area that I want to take profit at? Let's look to the right or the left right here. We saw this move to the upside right here. Where's your imbalance? Where's your liquidity? Rally-based rally, area of demand, as well as imbalance. And we have liquidity just above. We can see all the equal lows that are being formed. So another take profit, right, lies at that 1773 area through the 1721 area. However, the R is depending on how you want to look to take that trade. Which LTF do you target to find a breakage structure? Does that depend on the higher time frame you use to set up the take profits in the first place? That is going to depend on the higher time frames as far as that goes. Obviously, on the lower time frames, when you're up into these areas, meaning let's just take a look back here. I hope it shows me this on the 1 minute. It's being very, very, very slow today. Please let me drag it back. It won't even load. That's awesome. Okay, let's just do a 2 minute, see if that will load for us. And if not, we'll just go to the 5. All right, but there's a few ways you can start to take profits as a smart money trader and a swing trader within this certain scenario. I have seen some talk about taking profits after they see a break of structure opposite of their direction where they're looking to take it, right? So then they start to take profits at those areas, right? Following all the way down. Then they see this break right here and they're like, all right, I'm going to take some profits, right? And then the move starts to occur again. They wait for the next break of structure to the downside and then they look to take it even more, right? Or add on more to their position. But personally, as far as taking profits, I'm always looking for the most recent week high or the week low that was created. Meaning if I have a break of structure to the downside, right, and then I'm looking for the confirmation within that area of supply, where's my week low? If I get a break of structure to the downside right here, this low did not cause this new high. This will now help for internal structure taking as well, meaning if you have a 4-hour trend, right, it breaks to the upside right here, and then it starts to move again to the upside, right? We have a move to the upside just like this. On my hourly time frame, right, I can look for that break of structure to the downside, and I can look to play it to the downside, right, as far as how that goes. So we come up into this area right here. Your weak low is presented right here. And then you have your area of demand as well. So as we come down into these areas, let's say, right, and I'm going to make this red real quick to signify our hourly structure at this point in time. But let's say, right, we had 1, 2, here's your area of supply that was formed. And then your week low is your most recent week low right here. What if this were to reaccumulate and not mitigate your zone of demand, right? And liquidate these lows right here and then break structure to the upside, and you have something like this, right? Where price just comes down to these lows, doesn't mitigate that demand, and then just continues to the upside like this. And now all of a sudden you're stopped out of your trade even though it was correct. So to find this certain narrative within this point in time, because I'm playing counter trend, right? I have my area of supply. I have my week low that is presented right here, as well as my area of demand. So one, I have the first take profit at my week low, because what happens if it were to liquidate lows right here and continue to the upside, right? Our 4-hour structure is still bullish. So the 1-hour structure showed a possible move to the downside, right? To continue to the downside. But we need to understand that it's counter trend to our higher time frame narrative. So the 1 hour can break structure to the upside and it can go, targeting now this weak high from the overall structural narrative. I did hope that helped Maverick as far as that goes. But for these certain scenarios, when you are looking, perfect. But when you're looking for these trades like this helps you so much, because now you have the ability to, again, not have to be right. Who said it had to go to this demand zone? Nobody did, right? So if you're targeting that most, remember the 1, impulsive move to the downside, confirmation of your zone, targeting the week low, right? Now you can see the 1, 2, 3 that we are looking for every single time as we are looking to take these certain trades. Now I can show this with candlesticks. I was showing that with candlesticks a little bit ago, but we'll talk about it again as far as XAU goes. I appreciate it, brother. I appreciate it. But yeah, certain scenarios like this, again, right here, where would be my first take profit, right, after this entry on the 2-minute to 1-minute at this point in time. Week low is formed. This is my first take profit, right? Because what happened if this low was held, we ended up accumulating and continuing up into this area of supply, right? Then I'm stopped out of my trade, and then I don't know what's going on, right? But I still have the ability to gain that profitability from this structural narrative that is right here. Again, same exact thing. Week low is formed, right? Higher high is formed, and then the week low is taken out. So at this point in time, let's bring this back. Let's bring this up here, right? That first structural take profit can be based off of R, as well as that lower time frame structural narrative that we can see. Let's bring this back, right? And now we have a 9-to-1 within our lower time frame structural narrative. You could take I would be perfect with taking 25%, right, at that area, getting myself risk-free, maybe even setting my stops to break even, or keeping my stop losses now that I have protected myself with that trim, right? And now that that has occurred, I can wait for the next week low to be formed, or target that higher all, or that overall higher time frame trend that we are looking for, which on the 4-hour, right? We had areas here that we could have targeted, areas here that we could have targeted, but overall we were looking for that draw on liquidity. So I sat here, looked at this, and said, would I want to take profits here, right? And then directly after, would I want to take profits here? Or do I think I can gain more R out of this trade if I take profits here, right? And then here, instead of this structural narrative that is in place. Obviously, we understand it is bearish all the way to these lows, right? This low could have been targeted as well, because we understand that this is our higher time frame narrative, right? Entry right here. Again, impulsive breaker structure to the downside right here. Entry right here. Where are we targeting? That low, 1, 2, 3, confirmation of your zone, right? You can now see that every single time from higher time frames to lower time frames. And that's why I talk about the fractal nature of price and how it occurs with the same behavior over and over and over and over again. All right, so let's go ahead and delete this. And let's base this off of R now. So at this point in time, right, you took 25% at these areas at a 9-to-1. So 20 would net roughly, I want to say 2 to 3 R at that point in time. On the chart, next take profit 85-to-1, right? And then did I want to hold for this or this? Now that next profit is that 184 to 1, right? From that overall higher time frame structural liquidity. Yes, I could have looked for this area to take it, that rally based rally, right? But who said and how did I know, or did I know that structure was going to break to the upside right here? Did I know that it was going to continue to the upside right here after liquidating these lows, possibly breaking structure, right? You can see I actually ended up taking some longs within these areas. But understanding, right, that structural narrative is still bearish, is going to allow us to then gain that confidence overall. Now that this zone has been violated, right, we can see where that got violated. What did it get violated by? A redistribution. Move to the upside, liquidation, break a structure to the downside. Supply is created instead of demand, right? We came down into these areas, mitigated this institutional candle. All we did was mitigate that supply that was formed that caused that new low, right? So now we can see the literal setup happen over and over, right? And over again on our lower time frames, from our higher time frames to our lower time frames, how that confirmation comes into play and how we can look for these same moves over and over again and then hold for that higher time frame narrative. Now that literally every single time frame is within harmony, every single time frame is bearish at this point in time, right? So now I hold this for the overall weekly trend, because we did the weekly to the daily to the 4 hour, 1 hour, 15 minute, 1 minute, right? And so on within these scenarios. So that was XAU as far as how I look to take profits on swings. It's going to be based off of R as well as structural liquidity, what I'm looking to take profits on. With that being said, right, we are also going to get into simplifying this, right? We talked about the simplicity. I'm actually glad we showed this because that was very easy to visually see as far as how we can simplify our trades, right? How it is literally just one thing that we are looking for every single time, right? Confirmation of the zone on the breaker structure to the downside. Where's our next area, right? Where's our next algorithmic introduction of liquidity? Where's our next move? Boom, right? We now see the displacement candles to the downside versus the upside, and now start to see where supply is formed instead of demand, right? And now everybody, because XAU, this is a great one too. 80%, 80 to 82%, I believe, were net long on this trade. We're net long on this chart since here, since here, since here, since here, since here, since here, and since here, right? What are they doing? They're providing liquidity, providing reason for us to continue to the downside from our overall structural narrative. We can see that with our structural narrative, right? As retail, as quote unquote retail traders, right? So this is how we can start to now see the algorithmic introduction where we can look to enter trades on confirmation and hold for a higher time frame narrative. If you don't want to swing, that's completely fine. You can play a 4-hour chart, wait for the break of structure to the downside, target the most recent week low. You don't have to swing, right? No one says you have to swing. This still gives you that ability, right, to maintain pretty good profits within this certain scenario, right? 3 to 1, 4 to 1, whatever it is. How you like to take your trades is going to be based off of your personal life, meaning what hobbies do you do, right? When are you at the charts? What time of day are you at the charts? When are you looking to take certain trades? I personally have started to get to the point where I'm looking to only take 1 to 2 trades a week. 1 to 2 a week. You know why? Because I'm okay with 2.5% a week. That nets 10% a month. 10% a month on a $200,000 portfolio nets you around $16 or $16,000 in profit. Can you live with that? If you can't, then you're probably living over your means, right? These certain scenarios we need to be okay with as far as the market moves. We don't need to be right. We don't have to catch the entire move, but when we do, right, that just allows more confidence, right, and more ability to actually understand and feel like we are reading these charts, right? And we are in harmony with these charts as far as these trades and these candlesticks are moving. They are meant to manipulate you, right? If we show that willingness and that algorithmic, we get that algorithmic mindset, right, to where it's a robot. We've seen our entry, we've seen our confirmation of entry, right? We have our area to enter now, and we're entering, holding for the take profit, and not worrying about the rest, right, is going to allow you so much more profitability. I guarantee you there's a lot of times where new traders and certain traders like who are just getting into the game, right, have found certain scenarios where they have lost certain trades because they haven't held, right? They haven't held for their entire narrative or trusted themselves because they were either taking profit based off of what their P&L looked like, right? Um, decade swing high and lows. That's not bad. That's not bad. I actually like that. Same exact thing. Decade swing high and lows. Those are gonna hold liquidity underneath them. Why? Because you have higher entities, right? Institutions and larger banks at play, right? Putting their stop losses underneath those decade swing highs and lows. Putting their stop losses underneath the weekly swing highs and lows, right? Because they don't believe that they can be wrong. So let's just keep putting it underneath the weekly lows and seeing if those will hold, right? Um, it's very similar. It's the same exact type of scenario as far as how that works, right? 6 month lows or 6 month structure, right? You can look at monthly structure. These lows that were formed. This is institutions and dumb money, right? Quote unquote dumb money holding their stop losses underneath these lows, giving us reason to continue to the downside as far as our overall structural narrative and what that looks like, right? So simplify it as much as possible. Only look for that algorithmic introduction following that liquidity rate to the downside, right? Liquidity rate, break a structure to the upside with impulse, right? Now all of a sudden you have that algorithmic introduction, right? Look for the confirmation of that algorithmic introduction. Once that is there, you now have that actual reversal, right? Instead of trying to catch the bottom down here, you have now waited for confirmation and have now allowed yourself, right? Within this scenario, let's just do the ICT fair value gap, right? Holding it underneath these lows, holding it for a higher time frame. Let's talk about the confirmation of the zone, right? Break a structure to the upside. After confirming our higher low was formed. Now I have the higher low in place. Another long position, much less risk, right? Now we can see why I wait. It's the same thing. ICT fair value gap entry, right? Imbalance is being formed right here. All that is the liquidity rate to the downside. Here's your order block. Here is where algorithms decided to push price down to liquidate traders to the downside and then open up new positions to the upside, right? Now that their shorts are in drawdown from this push to the upside, their longs are in profit. They begin to take profit on their longs. What does this do? Cause our move to the downside. What does this do? Right? Cause the move into their shorts. Now their shorts are break even. They take out their shorts. They add new long positions, and now boom. Now the reversal comes into play. That's that algorithmic delivery of price, right? Now we can see it coming into play. That was from how the algorithms are entering their trades. They're entering here, pushing it to the downside. They make a little bit of money. They take profit, right? Not all the way. They start to enter long positions, push it up. What does that do, right? Leave these now in drawdown. They take profits on longs. It comes down into this area. And now that they are able to take off their short positions and fully enter their long positions, now we see how the reversal comes into play. And now we can see how it comes into play from a candlestick and a logical smart money, right, institutional perspective from how it's going to look like on the charts. I appreciate you, brother. Below 3 months, yeah, but you've already learned a lot, brother. You've already learned a lot. If you put the work down to it, then you will really get it. I tell this a lot. A lot of people who are in here already know, but I started last July. And I put the work in, right? And that's all you need to do is put in those hours, see it for yourself, find your system, find your edge, and continue to work on that. Do not sway from your system if you are comfortable with your system and if your system is profitable. If it is not profitable, then okay, we have an issue. Let's see what we can do about that, right? If it is profitable and if you are comfortable with it, keep running it. Keep honing that down until you are completely comfortable. And then you get to the point, right, to where you just sit down at the charts at a literal same exact time every day. And now all of a sudden you've been on the charts for only an hour a day entering your trade and you've made your profits for the week, right? You can go do whatever. I got into trading personally for time freedom. I want my time to be free, and the profits through trading is going to allow that ability, right? Because I want to have other business ventures personally, what I'm looking into as far as that goes. But when I got into trading, I was like, okay, this is a way, right, to allow myself time freedom. So if I'm sitting here staring at the charts for 8 hours a day, that's no good or no better, right, than the 9 to 5 job that is outside, right? The application that I could sign right now. Um, it is no better than that if I am sitting here slaving on the charts every single day, right? You need to allow yourself to come to the charts every single day at a certain time, find that style, find that edge, find when you can sit down at the charts with clarity, right? With clarity and with no distractions, with the ability to look at the charts unbiased and understand your setup coming into play. Um, TFF, that's awesome, brother. That's awesome, brother. Long term, way over short term games, brother. Way over short term games. That's why we're here. We're here for the long term. Those who are here for the short term are part of the 99% or the 90% that fail, right? And why are they here for the short term? Because they see the quick money. They see somebody out there posting $5,000 profits in 15 minutes, right? And they're like, oh, I want to do that too. How can I do that? And a lot of traders get into trading because they don't actually have a lot of funds, right? They want to be able to maintain a lot of funds. So this type of combination of both traders who don't have a lot of funds and the traders who are believing, oh, I don't have a lot of funds, but I could turn this into $2 million next week, right? Next month, whatever it is going to destroy your psychology as a trader and as someone who wants to look to take trades. Yep, their exit liquidity. They are the reason we're still here. They are literally the reason that smart money exists. They are the reason that the charts move the way they do since literally the 1900s, since the 1800s, right? Since they started, since the markets have been a thing, since there was paper on the chart, they capitalize off the manipulation of un how do I say this? Unstrong, right? Very weak minded traders who are emotional, right? And are looking to take it off of that. IRB said, the life coach, appreciate you, brother. Appreciate you, brother. Yeah, it's a ton of life lessons you learn yourself as well when you're looking at these charts, right? When you make certain decisions. If you can take a step back and say, why did I make that decision? And then say, how can I improve on that decision on my next trade? Then you're already going to improve way more than the other guy who's like, oh, I should have been right on that trade. Maybe I should just add more this time, right? No, that's not right. These scenarios and these abilities to maintain that comfortability is going to come through that discipline, right? And that's what we need to do. We need to set our system, we need to have our edge, and we need to discipline ourselves to completely and always look for that edge over and over again, look for that entry and look for that comfortability within our trades. But yeah, man, that was XAU. That was what we were looking for XAU. Why I took profits at those certain areas when I took profits, holding for the higher time frame narrative on lower time frame entries, right? It is possible. It is possible to catch. You guys saw this, right? You guys have been live. You guys have been live for 2-3 months that we've been talking about gold at the 1800s going to 1650. Right? We've been talking about this for months now, where our overall structure is still bearish, so it's going to continue bearish until we are proven wrong, right? So that's all we have to do is just continuously follow our narrative until we are proven wrong. Once I'm proven wrong in this certain scenario, once my daily structure breaks to the upside with impulse, then I'll look for a possible weekly pullback, right, into areas before that caused the breakdown. Then I can look for um, possible continuation, right, to the downside within these areas if I get confirmation. Now we can have multiple narratives come into play and multiple ideas and be ready for every single one, right? Now I'm saying, okay, if this, then that, but it doesn't have to do that, right? If this then that, it doesn't have to though. So let's just wait. Let's just wait for that algorithmic introduction to occur. Let's wait for the charts to show it to us. Like I say, wait for the waves to occur, right? If you're a surfer, um, why would you surf if there's literally no waves available? So why are you trading if there's no trades? If your setup is not available, if it is not clean, it is not bread and butter, all you're gonna do is just hurt your mentality, hurt your psychology over and over again, right? So again, we need to be confident, and that's going to come through discipline, through practice, right? And through seeing it on the charts. And that's going to be that experience that comes into play next. But with that being said, that was pretty much everything I had for you guys today on our 5th Intro to SMC class. Our next one that I want to get into, we're going to talk about counter trend trades as well as range trading, right? So we'll talk about lower time frame trades, how we can start to enter those, and how we can start to take profits on those certain positions, because you'll start to see that I'm not always just looking for this 181 to R&R setup. Yes, this is beautiful, right? And yet I think this ran for over 200. Yeah, 210 at this point in time. But now that I'm in my structural narrative, I can play the lower time frame structure. I can play my narrative down to these areas. So now I can hedge, right? If I get a break of structure to the upside on the 4-hour, confirming a possible daily pullback. What do we get? Break of structure to the upside. Where's your institutional candle following the liquidity raid? Uh-oh, I have an entry. Where's my setup from my most recent week high? Right here. Entry. Right? Entry, stop loss. Take profit at the week high or at the supply zone. I personally like the week high, because what happens within these scenarios is you could raid liquidity to the upside right here. Your supply could not be mitigated, and then you can break structure to the downside. That's why I like to target structural liquidity over everything, because I know for a fact if I did this right up until this point in time, this week high will be taken out. That week low will be taken out. That's that setup that we're looking for every time. Break a structure to the upside. All right, confirmation, and then your structural liquidity. Opposite is what we showed over here. Same exact thing over and over again. From literally the downside to the upside, we can see how that comes into play and how we can keep it simple, right? It's the same thing over and over again. But yeah, with that being said, that was pretty much all I had for you guys today. I appreciate everyone who had popped out on a Sunday night. Like I said before, already the fact that you guys are here on a Sunday night, not out partying with everybody else, right, already shows that you want that you're going to maintain that and start to achieve that. So now if you can sit there, look in the mirror, and figure out your strengths and weaknesses, and that's going to come through journaling, right, as well as other instances of trying to track your growth and track your trades, because then you'll start to see it, and then that's going to make you feel so much better as well when you start to get profitable and you start to get into those trades that go your way over and over again, and then you'll maintain comfortability, right? And then from there, it's literally only up from there. If you can find what your weaknesses are and continuously improve on them and work on them, then it is literally only up from there. And that's how we can start to become profitable as traders and in this space, right? But again, thank you to everybody who had popped out. I'm going to go ahead and end the recording now, but it will be posted on YouTube following completion on editing, right? I'm hoping to have it out by tonight. If not, it'll be out by tomorrow morning. But we do have a lot of news this week as far as on the charts. We have a lot of news this week. I was looking at it earlier. I'm going to post this after as well for what the news is coming out. But just understand that this is going to bring high volatility, which just means more opportunities, right? So something that I'm willing to wait for. Like again, like I was saying before, if I'm taking 1 to 2 trades a week, right, I can wait for those setups to come into play. And that's going to allow me to spend way less time on the charts and start to only look for the same thing when I'm coming on the charts, right? Because now I haven't got that they call it analysis paralysis, when you just feel like you're overwhelmed looking at too many candlesticks. You feel like you forgot everything that you were taught, right? Don't get that analysis paralysis. Go back to the basics, back test, work on what you are looking for as a trader. And once that comes into play, then you will start to maintain that profitability. But again, thank you everybody who had popped out tonight. And I will catch you all later. Is there any other questions or anything like that before I head out? I'll give about a minute or two. If not, completely fine, and I'll go ahead and end it. I think we are good to go. All right, ladies and gentlemen, I will catch you all later. I hope you all have a great rest of your day and or night, and I will see you tomorrow. Peace, peace.